When foreign companies set up in Serbia, be it Belgrade, Novi Sad, or one of the other larger cities around the country, there is a critical decision that needs to be made, and that is, do we rent or do we purchase our office and to house our staff? And in this video, I'm going to come at this from a CFO legal tax perspective and tell you what burdens you may be facing, which things that are unusual that comes up with leases and purchasing property, because of course no country is the same and there may be some crossover from your current country that you're in, but there might be some new rules and regulations that you're not quite familiar with. And my goal in this video is to ease that burden when you are looking to set up your business here in Serbia. Now, in Serbia, a foreign company can definitely purchase property here under the reciprocity laws here. One of the things that are excluded are agricultural properties. And so if that is one of your goals, then you would definitely have to set up a Serbian company, not a foreign company. So you would have to set up a corporation here. It cannot be an entrepreneur business, because if your company that you're coming from does not have reciprocity with Serbia, then for sure you, as a passport holder of that country, would not be able to purchase a property. Even though an entrepreneur business is a business, it's still a sole proprietorship which falls under your name. A DOO is a separate entity and is based here in Serbia. So that is first and foremost. Number two, that we do have VAT taxes here in Serbia. And so if you would like to be part of the VAT system, or you surpass the threshold of entering the or being excluded from the VAT system, then that VAT percentage is 20% here in Serbia. Now, property taxes is the next one we'd have to cross into as well. And when it comes to taxes for your property, this rate may not exceed 0.4% of the assessed value. Now, one thing we got to clarify is what you actually purchase the property for, if you do purchase it, and what it's assessed at are two different things. I know, for instance, when we ran or had our shop in Canada, what we purchased the shop for, or our office space, was much lower than the assessed value. Now, that may be the same here in Serbia. All depends on where you are purchasing, and that's something that we can also help you with here at Relocation Serbia. Now, one thing that you have to keep in mind is when property is transferred, either by sale or otherwise, and if it's excluded from the VAT system, be it that it's an older building, a secondary market, now you are going to be responsible for 2.5% of the transfer tax, which is determined by the contract price. And it could also be adjusted to market value on that side as well. Now, let's get into some of the trade-offs when it comes to leasing and owning property here for a business in Serbia. And now, number one, the leasing side, which is very common to the rest of the world, is you're going to have a much lower upfront capital required, and you can commit to a periodic lease and equal payments, rather than putting that money up front and purchasing a property. And if you're looking to, of course, grow your business, leasing is the best way, in my opinion. Everyone has their own perspective of how they want to proceed. And of course, none of this is legal or tax advice. I just want to make sure that I'm clear on that. Everybody's situation is specific. And if you want to look forward into these leasing or owning property here for your business, you can definitely set up a call with myself and my team, and we can go over your specific need. Of course, like I was just saying, when you're leasing, growing a business is the best way, because now you're not fixed with one particular piece of real estate that you may not be able to expand on, that you may outgrow in 6 to 8 months, depending on how fast your business grows. And if you do grow out, you can maybe pay a penalty to get released out of that lease and then move into a new office space. Now, also when it comes to leasing, the cash flow is more predictable. The reason that is because you know what you're going to be paying on the monthly basis. Typically, if there's any repairs that need to be done, that is typically done by the landlord, but of course that is all determined within the lease that you're signing with your landlord. And so if you own property like anywhere else, you yourself will be responsible for those repairs if need be. And depending on the type of building, the age of the building, the equipment that's in the building, that could add up to several thousands or into the millions of dollars in repairs, depending on what kind of repairs that need to be done. Now we're going to get into the depreciation of the asset, which is something that, myself as a real estate investor in Canada, many people didn't even know how depreciation works on property. And so we're going to also talk about how that gets into tax deductions and expense treatment. So the cost of acquisition, of course, the capital expense is not immediately deductible off your taxes. The property is capitalized and depreciated in amortization period. So you can't just take, I purchased this property for 700,000 euros and I'm going to deduct that off my taxes for that year. You're going to have to space that out over a number of years, and so you get that tax deduction over those years. And of course, if you don't know who to hire as a tax expert, we do have great tax people with our team that are able to facilitate these amortization periods and all your tax questions when it comes to this. Now, you can deduct certain operation costs, certain maintenance costs, repairs, insurance, and property tax and interest if you are financing the property. But the problem with financing here for a foreign company is going to be much more difficult than if you were to be a Serbian company. Again, the financing here isn't the best in my opinion. You typically need to be in business for 2 years before a bank will look at you, before you can even get credit cards. We've seen with some clients, which is unfortunate, but that's just how the business landscape works. Now, one thing you have to keep in mind is capital gains taxes. So if you're purchasing a property and not renting a property, and this also goes for a lot of residential clients too, there's a 15% capital gains tax here in Serbia. Now, there is a caveat that if you own the property for over 10 years, then you are exempt from that capital gains tax. But we're talking about businesses here for the most part. Residents and home ownership, people will own those for 10, 20, 30 years, and they don't have to worry about that typically. But if you're a business owner, you're going to be in that property for a couple years. You're going to obviously look at growing that property. And if you're selling it, then you have to take into that consideration that 15% capital gains. And some people might think, well, that's a lot of money to pay up front. Trust me, in my opinion, and from a lot of clients that we've worked with that have both purchased property and leased property here, that 15% capital gains is peanuts compared to what some people are paying in their home countries. I know right now in Canada, it's a 50% capital gains tax on property, regardless if it's an office building or business property, should I say, or your residential property. So people are getting hosed on that. So as an investor, I would much rather pay a 15% capital gains tax than a 50% capital gains tax. And of course, if the property is a new build, you will also have to look at potentially paying a 20% VAT tax on that as well. One of the things that you may want to consider is how you're going to structure that. Look into that with the investor that you're purchasing it from. Ask them if it's exempt from VAT tax. We can, of course, look into that with our tax professionals, our legal team, and see if there's any ways to reduce that VAT tax, especially if you're looking to purchase a brand new building. There is a new building going up here in the Novi Sad area. It's called the Iron Business Building, which is on the northern side. It's going to be just for business use, and there are ways that you can get around that. It's going to be a fantastic place to set up a business and a great strategic place for close to logistics, for highways, for meeting clients from international places, especially if you are bringing people in from out of country. Novi Sad to the airport is, about 50 minutes, depending on how fast that right foot is. Now, when it comes to leasing, the lease payments are typically deductible on your taxes like any regular operational expense. Now, one thing to keep in consideration is that you avoid the burden of depreciation and you avoid locking in capital into a non-core asset. But the one thing that you do lose on is the capital appreciation of that asset, and it can hinder you on your own balance sheet if that's something that you're concerned with. So to me, I would much rather deal with the depreciation as well as the capital appreciation from a investor's point of view. Now, of course, this market here in Serbia is much different than what I dealt with in Canada, and many of you viewers also will be dealing with similar situations where you may not want the depreciation. You may just want the lease side of things. Now, let's talk about the risk and flexibility and exit options. Now, when you lease, of course, there is a less of a downfall when it risks for the risk. If your business shrinks or if you decide to relocate, you're not stuck with a property that you have to see about offloading to someone. If you've made some extreme changes, say you set up a manufacturing business in that property and now it's full of equipment for manufacturing. Now you're stuck with finding someone who is in manufacturing and willing to take that property. Now, if you're in some sort of warehousing and it's just an empty shell and some other investor can come in there and kind of redesign it to their own specific needs, that is going to be a lot easier to offload. So again, this is all based on what you're going to be doing with your property. So of course, leasing is much easier. The lease often have escalation clauses, renewal is uncertainty, and the dealing with the landlord is a huge risk as well. They may want to renegotiate the lease. They may want to sell the property, and then the new buyers are going to obviously, or not obviously, but they may want you to leave the property, so you don't have that certainty of being in that location long term because you do not actually physically own the property. Now, if you own the property, of course, you absorb the real estate risk. So you are subject to market downturns, vacancies, maintenance surprises, which I touched on at the beginning of this video. But at the same time, you are more in control. You get to decide the improvements that you make. You get to decide the long-term planning. And of course, if you decide to sublease the property, you are able to do that as well because you yourself are the owner. Now, let's get into some of the zoning, regulatory constraints, and compliance risks. So when it comes to owning or buying a property, you must ensure first off that the property is zoned for the intended use. So is it going to be an office? Is it going to be residential? Or is it going to be mixed use? If you do not, you may be need to do some rezoning and permit changes here, which is something that of course has to go through the municipality, and that is something that we can do, but that can be a long, tedious process. So it's always best to find something that is already zoned for the type of use that you're looking for. Now, if you're leasing something, the lease should explicitly permit the intended use. If the landlord does not already have the correct zoning, you may be at risk for non-conform use. One of the things also you have to take into consideration is if the lease is more than 10 years, it may need to be entered into the real estate registry to bind the third parties if they are involved in that. And then if the landlord lacks compliance, you may inherit latent defects or legal exposure. So make sure that your leases are buttoned up. We've worked with clients here that even have taken us into account for their residential lease agreements, because you don't know what some landlords may put in there, what they might try and pull over your eyes. Some landlords don't even know what their properties are, the use for, or what the legal obligation is for them as landlords. So you want to make sure that you keep your rear in the clear, as I like to say, and don't believe what everyone's saying you. Typically, if a deal is too good to be true, usually there's a reason behind that. Now, what tends to lean more in Serbia in practice? Now, many foreign companies start with leases in offices. They could use this for shared office space, conventional leases, then rather than buying something right off the bat. For housing, some businesses will purchase full-out apartment buildings and then house their employees into that rather than just paying a landlord. That's just a much easier way to do it, especially if you want to bring in the employees' families in. Some landlords may not really like more than one individual in their apartment. So we've worked with some clients where they purchased the whole apartment building. They have 8 units in there, and then they decide what employees to stick in there and who they're bringing along with them. So I hope that this video has cleared up any uncertainties for you. If you would like to get more detailed information for your specific needs, feel free to book in a consultation with us at relocationserbia.com, and we'd be happy to go over your scenario. Thanks for watching. I'll see you on the next one.